All right, welcome to this explainer. Look, if you collect payments through Stripe, and it really doesn't matter if you're running an e-commerce store, a SaaS business, an agency, or if you're the one doing the books, you already know the absolute headache of trying to get your sales, your fees, and your bank reconciliations to match up perfectly. It is notoriously frustrating, right? So today, we're going to walk through exactly how to set up this absolutely crucial accounting workflow so your reports stay completely 100% accurate. You know, it really all starts with one super maddening question. Where did your processing fees actually go? You bill a client for one amount, but then a totally different, smaller number shows up at the bank. We have to account for that missing money accurately, instead of just shrugging and accepting that final deposit as the whole story. To get to the bottom of this, here is our roadmap for today. We're going to uncover the Stripe payout problem, look at exactly why relying on net income fails, introduce the clearing account solution, walk through the step-by-step QuickBooks workflow, and finally, talk about how to scale all of this up with automation. Okay, let's dive right into Section 1, the Stripe payout problem. We are literally going to follow the money here. Let's set up a really simple scenario. Imagine a customer pays you exactly $1,000 through Stripe. This is your gross customer payment, right? It's the total value of the sale. Now, in a perfectly frictionless, ideal world, you just see a clean $1,000 hit your bank account. But, as we all know, payment processors definitely do not work for free. Before that money ever even thinks about moving from Stripe to your bank, Stripe automatically takes its cut. Let's say they deduct $30. Now, that $30 is a completely legitimate business expense. You're literally paying for the service of securely processing that credit card transaction. Because of that deduction, the actual payout that finally arrives in your business checking account is $970. So you've got a $1,000 sale, a $30 fee, and a $970 bank deposit. That $30 difference isn't just lost income falling into some accounting black hole. It's a very real, measurable payment processing fee. And this perfectly illustrates the single most common mistake made in QuickBooks Online. The incorrect method is looking at that $970 deposit and just casually recording it as your total sales income. I get it, it's the path of least resistance, but it is completely wrong. The correct method relies on a gross to net accounting rule. You absolutely must record the $1,000 gross sale, record the $30 fee completely separately as an expense, and then recognize that $970 payout. Which brings us to Section 2, why net income fails. Let's talk about the chain reaction of errors. If you just record that net deposit, you kick off this whole chain reaction of bad data. Your sales, they're officially understated. Your Stripe processing fees, completely missing from the books. Suddenly, your profit and loss report lacks the basic visibility you need to actually analyze your true profit margins. And honestly, worst of all, bank reconciliation becomes an absolute nightmare when you're trying to match those net deposits to your gross invoices. It's a mess. So, how do we fix it? That's Section 3, the clearing account solution. This is how we bridge the gap. The highly recommended method to handle this workflow is using what's called a Stripe clearing account. Basically, this is just a temporary account you set up in QuickBooks Online. Its entire job in life is to track your money while it's in transit between Stripe and your actual real bank account. Think of it like a temporary holding pen. The customer's payment enters this account, the fee is pulled out of this account, and only the leftover remainder moves onto your checking account. Let's look at how beautifully these numbers balance out when you do it right. Your $1,000 gross sale goes straight into the clearing account. Then that $30 Stripe fee is assigned to an expense account. You'd probably name it something obvious like Stripe fees. That leaves exactly $970 sitting in the clearing account, which, surprise, surprise, perfectly matches the net payout transferred to your checking account. Your sales stay gross, your fees are tracked, and the final number is a perfect match for the bank. All right, Section 4, the step-by-step QuickBooks workflow. Let's get into the manual process. If you're running a low-volume business, here is your exact manual flow. Step 1, record the full $1,000 payment to the clearing account. Step 2, record the $30 fee as an expense. Step 3, just let that balance sit there in the clearing account. Step 4, when Stripe finally pays out, record the $970 transfer to your checking account. And finally, Step 5, match that transfer to your bank fee deposit. Boom, done. But wait, I need to pause here for a massive red flag warning about existing invoices.
If this Stripe payment is paying off an invoice that already exists in QuickBooks, you have to receive the payment against that specific invoice and deposit it into the clearing account. Do not, under any circumstances, create a brand new sales transaction for this payment. If you do, you're literally going to double count your income, which is a huge headache to fix later. Obviously, if there's no invoice, you just record the gross sale.
Now, for Section 5, Scaling with Automation. This is for the high-volume businesses out there. Because, let's be real, doing this manual entry gets incredibly painful when your transaction volume shoots up. A single Stripe payout almost never represents just one clean sale. Usually, one payout bundles a whole bunch of customer payments, processing fees, refunds, chargebacks, disputes, and tax adjustments all mashed together into one lump sum. This is exactly why just logging in and checking your daily totals simply is not going to cut it anymore. Thankfully, if you've got high Stripe volume, using an integration tool is absolutely the best way to eliminate all that manual grunt work. The source material specifically highlights an app called PayTracker for this. Basically, it syncs your Stripe sales, fees, refunds, and payouts directly into QuickBooks Online. And the best part? It automatically maps the accounts, so Stripe fees go right to your expense account and payouts are routed straight through that clearing account we talked about. It does all the heavy lifting, ensuring your final payout matches the bank deposit without you having to do complex math every single day. Now, even with the best processes in automation, sometimes things just don't perfectly balance out. If your payout doesn't perfectly match the bank deposit, you're going to have to put on your detective hat. Did a refund or a chargeback suddenly reduce the payout? Are there active customer disputes or weird tax adjustments? You also want to keep an eye out for duplicate transactions, failed payments, or honestly, just simple timing differences between when Stripe initiated the payout and when your bank actually bothered to process the deposit. So we've covered the core problem, the clearing account solution, the manual workflow, and exactly how to automate it. Remember, the ultimate goal here is to keep your income accurate, your fees fully visible, and your reconciliation as easy as possible. So I want to leave you with this final thought to consider as you go review your own accounting. Are your payment processing fees currently hiding from your profit and loss statement? Thank you so much for joining me for this explainer, and I highly recommend applying this clearing account workflow to your own books today to find out for sure.